Fed cut rates again. That's the third consecutive time now. And history tells us something about that. And seems to be a bit too much for an insurance policy, right? So maybe the Fed is labeling this as insurance policy against trade war uncertainty. But if we look at the manufacturing activity in the US, and also the fact that inflation is really falling while the Fed is cutting rates, then I think the Fed should start saying things with a different eye. They said they will stop cutting rates for now, and that is a bit problematic, I would say, although it was seen bullish in the beginning. Now, Bank of Canada was also more dovish for the first time after a while. The Bank of Japan overnight left rates unchanged. The conference is in about 20 minutes from now, so I would pay attention to what happens with yen pairs. So with that being said, found a good opportunity to analyze the Canadian dollar against the yen. And since Mr. Fed decided to cite trade war, although they said they wouldn't, saying that the situation is improving and they are on phase one of a trade deal. I mean, even Mr. Trump doesn't know that he's not that certain. I thought we should also touch on USD against the Chinese yuan for today's FX miners. This is, for me, moving in some sort of ending triangle pattern, okay? We've had waves 1, 2, 3 down here, and then we should be expecting 4 and a last wave down, wave 5, to complete this ABC correction, okay? So we are in the, currently in leg C. Let me just go a little bit further out, make sure that we're not missing what I'm saying. So we are looking at this as the C. So we've got 1, 2, 3, 4, and 5 down there. Now, at the moment, we're done with wave 3, and we are in a complex pattern that we're pretty much done with 2/3 of this wave 4, okay? Which is also, of course, the ending wave, the Y wave of this complex pattern, as well as an impulse that is currently correcting down to wave minute 4. So from down here, from the area of around 1.68, which is the 50 Fibonacci retracement of the last move to the upside, we could start seeing prices moving higher, crossing above the 83.80 and eyeing the 85.86 levels to complete wave 4. And from there, it's quite possible that we'll start seeing prices move to the downside. Now, on the other pair I wanted to look into today is the USD with the against the Chinese yuan. Things here are a bit more clear. In the longer term, just to give you a better idea as well, we are on a corrective pattern. At least that's what my analysis says. This is wave A, this is wave B, and up here wave C. So we're done with this, and 1, 2, 3, 4, 5 ended up here, and now we're looking again at completing this correction with an ABC pattern. The A is done, the B is done. We are halfway through wave C. 1, 2, we are expecting wave 3 to complete, then 4 and 5, okay? And likely to end around 6.93 again, or anywhere between the 100 and 161 extension of wave A and B, which is around 7, and down to 6.9, which is both of them are very good round numbers, right? Now, the Fibonacci retracement of this last impulse wave to the upside, which is wave C, intermediate wave C. Also, we've got the 38 and 50 Fibonacci's within this zone. So in here, we could be expecting some sort of sideways markets, a lot of activity until a breakout to the upside or downside is seen. Because if we go below 3, we should ignore that. We should be looking at going down to the low of 4, okay? And then last resort will be the top of wave 1. If we, of course, will break below that level, we're probably looking at this becoming a more complex pattern. and we are likely going to revisit that in the near future until that time comes anyway. So for the day, this is all there is. I would pay attention to what happens in general with the trade war. This is very, very, very important for projecting the price of dollar against the Swiss, the Chinese yuan, as well, of course, as other risk events, because the Canadian is a risk asset, and maybe carry trade, very good carry trade as well for this year. And the yen on the other side is the under risk, the safe haven option.